Assalamu alaikum and good day. Students, in the previous class, we have started IAS 33, earning per share. And we did introduce the concept of bonus issue. Let's practice one more question on that concept of bonus issue. After that, inshallah, we will introduce more concept in IAS 33. Let's see a question. Let's say we have issued shares 100,000 on 1/1/2024. Then we have issued shares 50,000 in March. Nothing is mentioned. It is always end of the month. Nothing is mentioned. It is always assumed end of the month. Let's say issue 200,000 shares in June. 40% is bonus issue in September. Year end is December 2024. The requirement is simply calculate weighted average ordinary shares. I really want every one of you pause the video, attempt the question, and then obviously unpause the video and watch the answer. Let's start. Weighted average ordinary shares. So we are having at the start of the year, we are having 100,000 shares. Let's see how many months this company was having 1 lakh shares. From 1st January 2024 till 31st March 2024. There's a gap of 3 months. It means first 3 months, company was having only 1 lakh shares. Okay. After 100,000, company has issued more 50,000 shares. It means now the total will become 1,50,000. For how many months now? From March till June. Again, there's a gap of 3 months. 3/12. Then in June, company has issued 200,000 shares. Before this 200,000, already company was having 150. So it means now total number of shares, they will become 3,50,000. How many months? From June till September. Again, the gap is 3 months. Okay. Now in September, bonus issue, company has made the bonus issue. Okay. This time, instead of a ratio, examiner has given you the percentage. Very simple. We did discuss in the previous class. Either examiner is going to give you the ratio of the bonus or the percentage. In this question, examiner has given you the percentage. Calculation of BF is very simple. The bonus fraction will be 1.4. Now, what are we going to do with this bonus fraction? Since it is 40%, so the bonus fraction is 1.4. If the percentage was 20, then bonus fraction would have been 1.2. If the percentage was 30% bonus, then bonus fraction would have been 1.3. Okay. Now, what are we going to do with this bonus fraction? Simply, you will multiply all the shares which are there in the question before the bonus fraction. So all these 1.4, 1.4, and 1.4 plus. Now let's calculate how many number of shares will be there after the bonus issue. So before the bonus, the total number of shares are 3,50,000. Before the bonus, total number of shares are 3,50,000. Bonus is 40%. If I take 40% of 3,50,000, if I take 40% of 3,50,000, let me calculate. I'm getting 1,40,000. Since before the bonus, we have 3,50,000 shares. If I take 40% of this 3,50,000, it is 1,40,000. So 3,50,000 plus 140. After the bonus, total number of shares will be 4,90,000. How many months? 3 months. Because after bonus, there's no transaction. So from September, 30th September till 31st December, there's a gap of 3 months. So let me repeat. Since the bonus issue is 40%, so the bonus fraction is 1.4. If the percentage was 20, bonus fraction would have been 1.2. If bonus percentage was 30, the fraction would have been 1.3. Before the bonus, total number of shares are 3,50,000. So what we did, how did we calculate number of shares after the bonus? I just took 40% of 3,50,000, it is 1,40,000. So 350 plus 140. It means total number of shares after the bonus we have 4,90,000. So let me simply use the calculator and let's see what is the amount, what is the answer of weighted average number of ordinary shares. So 1 lakh multiplied by 3 multiplied by 1.4 plus 1,50,000 multiplied by 3 multiplied by 1.4 plus 3,50,000 multiplied by 3 multiplied by 1.4 plus 4,90,000 multiplied by 3, and let's divide this all with 12. I'm getting 3,32,500. Let me recheck so that we should not be making any errors, because otherwise those students, they're going to watch this lecture online, they should not have any issue. So 100,000 multiplied by 3 into 1.4 plus 1,50,000 multiplied by 3 into 1.4 plus 3,50,000 multiplied by 3 into 1.4 plus 4,90,000. So that's accurate. Now, another concept regarding bonus issue. See, whenever company makes bonus issue, actually what bonus issue does, bonus issue, number one, it is going to increase your number of weight. Obviously, bonus issue is going to increase your weighted average ordinary shares. Okay. And definitely increase in weighted average number of ordinary shares will reduce your EPS. So if somebody asks you a question, what is the impact of bonus on your EPS? So obviously we will say bonus issue actually reduces the EPS. Let's say APLC has made the bonus issue in 2024. So obviously in 2024, due to the bonus issue, number one, weighted average number of ordinary shares, they have increased. Obviously EPS has reduced due to the bonus issue. Now, what happens when we send the financial statements of company to the stock exchange? So always we basically send financial statements of the current year as well as at least 1 year comparative, previous year as well. Now the issue is in 2024, company has made a bonus issue and it has the impact on the EPS. So what you have to do? You have to bring the effect of bonus into the EPS of 2023 as well, so that basic EPS of 23 as well as basic EPS of 2024 should be comparable. So whenever there is a bonus issue, we have to actually restate the previous year EPS. Repeat, whenever there is a bonus issue in the current year, we have to calculate restated EPS for the previous year. We have to restate the previous year. Simply, we have to incorporate the effect of bonus issue in the previous year EPS. How to incorporate impact of bonus into the previous year EPS? It's very simple. You just need to do one thing. While restating previous year EPS, you just need to multiply previous year EPS with the inverse of bonus fraction. For example, I'm just assuming Let's say in 2024, we have a profit after tax which is 600,000. So it means the basic EPS of 2024 will be 600,000 divided by 3,32,500. Let me use the calculator. Let's say I'm getting $1.8045. Assuming examiner has given us a basic EPS of 2023, which is, let's say, 2.345. Now, in the current year, the EPS is 1.8045, and in the previous year, the EPS is 2.345. Okay, EPS, I would say, is a key performance indicator when we measure the performance of a company, when we assess the performance of a company. So right now, it can be seen that it looks that company is not performing well because in 2024, EPS is less than the previous EPS, previous year EPS. But as I mentioned just 2 or 3 minutes ago, whenever there's a bonus issue in the current year, you have to bring the impact of bonus, you have to incorporate the impact of bonus into the previous year EPS also, so that the previous year EPS and the current year EPS should be comparable. How to incorporate the effect of bonus into the previous year EPS? Very simple. All you need is just multiply previous year EPS with the inverse of bonus fraction. Restated, we call it restated EPS. How to calculate restated EPS? You will take 2.345. Bonus fraction is 1.4. Inverse of 1.4 is 1 upon 1.4. Repeat. While restating previous year EPS, you just need to multiply previous year EPS with the inverse of bonus fraction. So 2.345 multiplied by 1 divided by 1.4. I'm getting 1.675. Now look at this. Logically, we should be comparing restated 1.67 EPS with 1.8045, or you can say that current year EPS, which is 1.8045, should be compared with the restated EPS, which is 1.675. Now, if I compare current year EPS, which is 1.8045 with the restated EPS, now the decision will change. Now we'll say, in fact, company has performed well as compared to the previous year because EPS has increased. So students, you just need to remember one concept. Whenever there is a bonus issue, actually, then you have to restate previous year EPS. How do we restate previous year EPS? Just a very simple step. Take the previous year EPS and multiply that previous year EPS with the inverse of bonus fraction. Let's see one more question. 2024 bonus issue is, let's say, 1:3. Bonus is 1:3. Okay. And let's say basic EPS of 2023. It is 5.25. Requirement is a very simple requirement. Calculate restated EPS of 2023. Current year is 2024, in which there's a bonus issue of 1:3. Examiner, let's say, has given you the basic EPS of the previous year, which is 5.25. And the requirement is very simple. Calculate a restated EPS of 2023. Okay. Bonus issue is 1:3. It means the bonus fraction. How do we calculate bonus fractions? Shares after bonus divided by shares before bonus. Shares after bonus divided by shares before bonus. How do we calculate bonus fraction? Very simple. Shares after bonus divided by shares before bonus. 1:3 means one bonus against 3 shares. Obviously, if company has issued one bonus against 3, so whoever is having 3 shares after bonus, they will become, each 3 shares after bonus will become 4. Before bonus, it was 3. So this is your bonus fraction. Shares after bonus divided by shares before bonus. How do we calculate restated EPS? Take the previous year EPS and simply multiply previous year EPS with the inverse of bonus fraction. If the bonus fraction is 4/3, inverse will be 3/4. So let me repeat it. How do we restate previous year EPS? Just multiply previous year EPS with the inverse of bonus fraction. So 5.25 multiplied by 3 divided by 4. I'm getting answer 3.9375. So I strongly believe now the concept of restating EPS should be very clear to everyone. Now let's talk on the right issue. See, right issue, right shares are obviously they are also offered to the existing shareholders. Like bonus shares are given to the existing shareholders. Similarly, right issue, they are also made to the existing shareholders. Okay. But the biggest difference between bonus and the right issue is right issue. They are not in free. They are not free. They are not free of cost. If a shareholder wants to get the right shares, obviously shareholder will have to pay to the company. So the biggest difference between right issue and the bonus issue is bonus, they are free of cost, but right issue, they have some cost. Similarity is bonus and as well as right, both are issued to the existing shareholders. Okay. Now, since right issue is made to the existing shareholders. So what happens? Organizations, they provide incentive to the existing shareholders, and the incentive is right issue will be issued at a price lower than the current price. See, if the current price is $10, and if you issue right at $10, nobody is going to get right. Nobody is willing to take right issue from you because you are asking the same price which is in the market. So why would your existing shareholders, they will ask for the right? They will never ask. So normally what happens, organization, obviously they provide incentive to the existing shareholders by issuing right shares at a lower price than the current price, which is right now at the stock exchange. Okay. Third point, which you have to understand, what is that? Since the right issue is issued at a lower price than the current share price, then there is an anticipation of stock exchange. The anticipation of the stock exchange is that since the right issue is made at a lower price than the current price, then every shareholder who is getting the right shares is going to sell their rights. Since every shareholder is going to sell the right shares, so obviously the selling pressure will increase. if the selling pressure at a stock exchange will increase, then the share price after the right issue will drop. So share price after the right issue will always drop. The reason is anticipation of the stock exchange. The anticipation of the stock exchange is the perception of the stock exchange is that everyone who is getting the right shares is going to sell the right. Obviously, in order to get the benefit, but when everyone is going to sell the right shares, it will increase the selling pressure of the shares and the share price will drop. So share price after the right issue. Share price after the right issue, it has a technical name. Let me write that technical name. And what is the significance of that technical name? I'll come to that also. So share price after the right issue. Share price after the right issue, it is called theoretical X right price. Theoretical X right price. TERP. So share price after the right issue is called theoretical X right price. Number one, in case of right issue, you should be really good in calculating theoretical X right price. And the second concept, which is very, very important, what is that? Since the right issue is issued at a lower price than the current market value. Repeat. Since the right issue is issued at a lower price than the current price, that is why IAS 33 says, in case of right issue, the impact of bonus is built into the right issue. Entire right issue is not a bonus issue, but since bonus means when you are giving shares in free, since in right issue, we are not charging the exact market value, we are charging less than the market value. It means there's a bonus as well, which is built into the right issue. What is the logic behind that we are saying bonus is built into the right issue? Because we are not getting the same current market value. We have issued rights at a lower price. So due to getting less value from the shareholder as compared to the current share price, IAS 33 says you are also giving a little bit bonus to the shareholders. Okay. It means right issue is having the impact of bonus as well. Since the right issue is having the impact of bonus as well, so you should be able to calculate the bonus fraction in case of right issue. How do we calculate bonus fraction in case of right issue? Very simple. Now we are discussing bonus fraction in case of right issue. So bonus fraction in case of right issue is equal to share price before right simply divided by theoretical X right price. And obviously, mathematically, the answer is going to be greater than 1. Repeat. How do we calculate bonus fraction in case of right issue? Simply bonus fraction is equal to share price after right divided by theoretical X right price. And we know the meaning of theoretical X right price. The meaning of theoretical X right price is share price after the right issue. Now the question is, what are we going to do with this bonus fraction? Very simple answer. All those shares which are in the question before the right, we will multiply all those shares with the bonus fraction. The treatment of the bonus fraction of the right will exactly be same which we have done in case of bonus issue. So first you have to calculate bonus fraction and then just multiply all those shares in the question they are before the right. How do we calculate bonus fraction in case of right issue? The formula is in front of you. Share price before right divided by theoretical X right price. Theoretical X right price means share price after the right issue. Since we know that share price after the right issue will decline, will drop, that is why I've written mathematically your bonus fraction answer is going to be greater than 1. Now let us see an example. First, let's see how do we calculate theoretical X right price. Because if you can calculate theoretical X right price, then obviously calculation of bonus fraction is not difficult at all. So the main thing which you need to learn is how do we calculate theoretical X right price. Let's say we are having a right issue 1:2. Share price before right is, let's say, $16. Right issue price, it is 12. Requirement is calculate theoretical X right price, and the second is bonus fraction. There are two requirements. Share price, one is theoretical X right price, means share price after the right issue, and the second is bonus fraction. Let's calculate first theoretical X right price. How do we calculate theoretical X right price? Simply make 3 columns. The first one is shares, values, and total value. Whoever is having 2 shares will get 1 right. Repeat. Whoever is having 2 shares will get 1 right share. Share price before the right is 16. Right price is 12. Okay. So 2 multiplied by 16 will get 32. 1 multiplied by 12 is obviously 12. So 32 plus 12, 44. We can say that 3 shares are having a total value of 44. After just doing this simple calculation, the interpretation is 3 shares are having total value of 44. So I can easily calculate, we can easily calculate the share price. We can easily calculate the value of 1 share. That is called TERP, theoretical X right price. 44 divided by 3. So let me use a calculator. I'm getting 14.6. Okay, make it 7. That is theoretical X right price. Now bonus fraction. Share price before the bonus, before the right is 16. Theoretical X right price is 14.67. So obviously the answer is going to be greater than 1. 1.09. Let's see one more example. 2024. Bonus issue is, let's say, 1:3. Share price, not right issue. A right issue is 1:3. Share price before right is $20. The right issue price is 15. 2023. Basic EPS is $5. Requirement number 1. Theoretical X right price. Second is the bonus fraction. Third, restated EPS of 2023. Restated EPS of 2023. Okay, let's first calculate theoretical ex-right price. Just simply make 3 columns. Shares, values, and total value. Whoever is having 3 shares will get 1 right. Share price before the right is 20. The right issue price is 15. So obviously, if the share price before the right is 20, then 3 shares total value is going to be 60. We can say that 4 shares, they are having total value of 75. So very easily we can calculate the value of 1 share, which is called theoretical X right price. So simply 75 divided by 4. I'm getting 18.75. Now the bonus fraction. Share price before the right, 20. Share price after the right issue is 18.75. And I've already given you the concept. Conceptually, the bonus fraction has to be greater than 1. 20 divided by 18.75, I'm getting 1.067 with a little bit rounding off. This is your requirement number 1. This is your requirement number 2. Now, examiner has also asked to calculate a restated EPS for the last year. Now, listen. Whenever there is a bonus issue, you have to restate the previous year EPS. Now, you might be thinking, sir, in the current year, we don't have bonus issue. Company has made a right issue. I think we have already decided a right issue is having the built-in effect of bonus. And we have already calculated a bonus fraction also. So what you have to do, you have to restate the previous year EPS by simply multiplying the previous year EPS with the inverse of bonus fraction. For example, restated EPS of 2023. They have given us a EPS of 2023, which is 5. Take this 5 and multiply this with the inverse of bonus fraction. For example, if this is your bonus fraction 1.067, the inverse of 1.067 is 1 upon 1.067. If, let's say, this value disturbs someone, there's another presentation is available, which is 100% acceptable. What is that? Look at this. This is your bonus fraction. 20 upon 18.75 is your bonus fraction. While restating the previous year EPS, you have to do one thing. Just multiply previous year EPS with the inverse of your bonus fraction. Inverse of 20 upon 18.75 is 18.75 upon 20. Obviously, both the presentations are acceptable. So 5 multiplied by 18.75 divided by 20. Logically, your restated EPS will be less than 5. I am getting 4.6875. So now remember one point. Whenever there is a bonus issue or right issue or even both, you have to restate previous year EPS. How do we restate previous year EPS? Just do one thing. Take the previous year EPS and multiply the previous year EPS with the inverse of bonus fraction. Let me give you one more example. Let's say the current year is 2024. We have a bonus issue. 1:2. We also have a right issue. Let's say 1:3. Share price before the right is, let's say, 25. Right issue price is $20. 2023 basic EPS is $4. And there's only one requirement. Calculate restated EPS of 2023. Now, what you have to do, obviously, you have to simply multiply the previous year EPS with the inverse of bonus fraction of bonus as well as right. Because in 2024, there's bonus as well as there's a right issue. So let's first calculate bonus fraction relating to the right issue. Obviously, first we have to calculate theoretical exercise price, shares, values, and total value. So whoever is having 3 shares will get 1 right. Share price before right is 20. Price of the right is, share price before the right is 25 and the right price is 20. It means 75 and 20. So we can say that 4 shares are having total value 95. So very easily you can calculate the value of 1 share. That is theoretical X right price 95 upon 4. That is 23 point. Bonus fraction. You have to take the share price before the right, which is 25 divided by 23.75. How will you calculate the bonus fraction of the bonus issue? That is very easy. Whoever is having simply 2 shares before bonus will get 1 bonus. So 1:2 means after the bonus, each 2 shares, they will become 3. 1:2 means against each 2 shares, company has issued 1 bonus. So obviously after bonus, each 2 shares will become 3. So the fraction is shares after the bonus, shares after bonus divided by shares before bonus. So simply in case of bonus issue, your fraction will be 3/2. Now listen. When it comes to restating the previous year EPS, all you need is just multiply previous year EPS with the inverse of bonus fraction. Now we have bonus as well as right. So look at this. What we are going to do. Restated EPS of 2023. The basic EPS of 2023, examiner has given us $4. Okay. Multiply this with the inverse of BF. 23.75 upon 25. Obviously, inverse of bonus fraction. And inverse of 3/2 is 2/3. Here comes your restated EPS. Let me use a calculator. 4 multiplied by 23.75. Then 2 divided by 25 divided by 3. I'm getting the final answer 2.533. Let's recheck so that those are just watching the recorded lecture, they should not have any issue. That's perfect. Okay, students, in today's class, we have discussed what if the right issue comes, what to do. Inshallah, in the coming class, we are going to do the practice from the Kaplan kit of IAS 33. Plus, I'm going to introduce more concepts of IAS 33, like I'm going to introduce the concept of potential ordinary shares, and also we'll be discussing the diluted EPS. But obviously, first we are going to do a number of questions on the area which we have so far studied. And after that, inshallah, I'm going to introduce more concept of IAS 33. So simply thank you very much that you have taken out time to attend this class. Have a nice life and see you all inshallah in the next class. And I'm going to keep the next class. So stay updated, and I think before the class, I'm going to share the timing in your relevant WhatsApp group. Thank you very much.